This is the accounting assignment. Hello everyone, I'm Sharon. I will show you how to do this assignment. And this is the question. You are required to open the existing accounts list in the trial balance. Show the general journal enter for purchase of non-current assets on credit. Post all transactions to their individual accounts and balance the accounts as required. Prepare a new trial balance as at 31 October 2011. This following trial balance was prepared by the owner Sharon after she commenced her loan moving business north of the city. And the bank, motor vehicle, movers, tools are debit, and loan and capitals are on the credit side. And let's put them into the individual accounts. And first, bank, we put it at debit side. And the motor vehicle is also on the debit side. The movers is on the debit side. And the tools is also on the debit side. And loan and capital is on the credit side. And during the first week, Sharon had the following transactions as she has asked you to post to the accounts in the general ledger. And there are 1, 2, 3, 4, 5, 6 transactions. And firstly, we put the general journal, and as a question, we should put the non-current asset on credit, and these are put into the general journal. And mover, in these 6 transactions, only this one and this one are non-current asset on credit. So we put the date, details, debit, and credit as at the top. And the October 3rd is new movers led bank, and this is purchased mover on credit, which is 4,000. And the October 5th is movers new mover led bank, and this is purchase another larger mover on credit and pay 2,000 deposit. The first transaction is October 3rd. Is purchase another mover on credit from new movers led for 4,000 and paid 1,000 deposit. So we put the new movers led and bank for 4,000 on the movers, and it's on the debit side. And the bank is 1,000 on the credit side. New movers led is 3,000 on the credit side. The second one is repaid 2,000 of the loan. So we put the loan is debit, and the bank is credit. So we put 2,000 on bank and on the credit side, and the loan is 2,000 on the debit side. The third is withdraw 200 cash to pay his doctor's school fees, personal use. Is drawings and bank. In drawings is debit, and bank is credit. So we put 200 on credit side on the bank, and the drawings is 200 on the debit side. And the next one is brought spare parts for the movers was 220 for cash. In the spare parts is the debit, and the bank is credit, so we put 220 on the credit side, and 220 on the debit side of the spare parts. And the next is purchasing another larger mover from new movers ledge for 5,200 and pay 2,000 deposit. The mover is debit side and the bank, and new mover ledge is credit. So we put 5,200 on the debit side of the movers, and on the bank is 2,000 on the credit side. New movers led is 3,200 on the credit side. The detail is movers. The next is brought additional tools for 1,000 cash, and it's tools and the bank. The tools is on the debit side and the bank is on the credit side. So we add 1,000 on the bank and 1,000 on the debit side of the tools. Then let us add them together. The bank, and this is a balance carried down, and this is a balance brought down. And the balance carried down and the date is October 31, and it is the end of this month. It's $3,580, and this altogether is 10,000. And this number is come from 10,000 minus 1,000 minus 2,000 minus 200 minus 220 minus 2,000 minus 100, and then it's 3,580. And this number comes here is balance brought down. And this is the first day of next month. It's November 1st. And the same is the motor vehicle is 20,000. Movers is 19,200. And tools is 6,000. New mover lead is 6,200. Spare parts is 220. Loan is 5,000. The drawings is 200 and the capital is 38,000. And don't forget this line and the double line. And let's do the trial balance. The trial balance is at 31 October 2011, and this is the end of this month. So it's bank, motor vehicle, movers, tools, spare parts, new movers lead, loan, drawings, and capital. Bank, motor vehicle, movers, and tools, and spare parts are on the debit side. And new mover lead and loan is liability, so it's on the credit side. Drawings and capital is owner's equity. Drawings is on the debit side 200. In capital is 38,000. And add them together is 49,200. And this is a line and the double line at the end. Finally, we do the balance sheet. Balance sheet is at 31 October 2011. This is come from the current asset, non-current asset, current liability, non-current liability, and the owner's equity. The bank is the current asset. Motor vehicle, movers, tools, and spare parts are the non-current assets. The current liabilities is only new movers lead, and the loan is non-current liabilities. And the capital and drawings is on the owner's equity. And we should add the current asset here, add the non-current asset here, add non-current liabilities, and add current liabilities and non-current liabilities, and the owner's equity. Finally, we add this together to here, and add the total asset here. Total asset and the total liabilities and the owner's equity should balance. It is 49,000. So this two is 49,000. It is balanced. And don't forget the dollars and the double line. Do you understand? Thank you. That's all.